They said Ripple would never back down. Yet here we are, with the company taking everyone by surprise and finally dropping its cross-appeal in the dramatic legal showdown against the United States Securities and Exchange Commission. What does this bold move mean for the future of digital assets? And how did we even get to this point? Today, we are diving deep into the captivating story behind Ripple's legal battles, the significance of this abrupt strategic shift, and, most importantly, what it might mean for you, the community that has been following every twist and turn with bated breath. In this episode, we will tackle critical revelations, how Ripple's leaders made this unexpected decision, why XRP's status as a non-security in secondary markets remains firmly intact, and whether the once intimidating SEC is truly ready to retreat from center stage. Brace yourselves, folks, because the story of Ripple has always been an emotional roller coaster, featuring intense debate, shifting alliances, and some of the most passionate supporters in the cryptocurrency universe. Just a few short years ago, in December 2020, the SEC dropped a bombshell. It accused Ripple of unlawfully selling unregistered securities. Many in the crypto world were stunned. Was XRP really a security, or was this just an overreach by an agency that has long struggled to find its footing in the rapidly evolving blockchain environment? The lawsuit immediately attracted an extraordinary level of publicity, transforming the fate of a single token into a litmus test for how regulators would treat the broader digital asset space. But what exactly is Ripple, and why has it incited such intense reactions? The company, led by the charismatic Chief Executive Officer Brad Garlinghouse, has grand ambitions that go well beyond speculative coin trading. Ripple's vision is to build an internet of value, a borderless framework that enables money to move as quickly as data. Given that we live in a world where sending an email is lightning fast, but sending money across countries can be painfully slow, this promise of frictionless global transfers is a major deal. Institutional investors took notice, and so did everyday enthusiasts, who saw XRP as a path to a more efficient, more inclusive future. Then came the legal storm, and the question on everyone's mind was whether the SEC would squash Ripple's grand dream. In the beginning, the SEC's accusations made headlines. Ripple's leadership team fought back, delivering scathing statements about government overreach and a paternalistic approach to regulating a technology that has the potential to empower millions of people. That set the stage for a protracted and often unpredictable legal escapade. Judge Annalisa Torres became a central figure in this unfolding saga, with every ruling and hearing dissected by supporters and skeptics alike. Over time, some of the court's decisions seemed to favor Ripple, while others appeared to give the SEC a slight edge. Yet, the unstoppable passion of the crypto community never waned. Supporters believed, and continue to believe, that the outcome of this case is bigger than just a single company, setting an important precedent for how other digital assets might be regulated. Then, we entered the year 2023, and new developments began arriving almost monthly. Among these was Ripple's cross-appeal, which challenged an earlier court finding related to historical institutional sales of XRP. Ripple's leaders, including Chief Legal Officer Stuart Alderodi, seemed confident that pushing forward with the appeal would solidify their standing even further, ensuring that no shadow of doubt remained over the status of XRP. However, the universe had other plans. Judge Torres, known for her meticulous legal reasoning, denied a joint motion from Ripple and the SEC that sought to change certain critical terms in the final judgment. That triggered a wave of speculation about what might happen next. And then came the decision that caught everyone off guard. Garlinghouse announced that Ripple would drop its cross-appeal. In one fell swoop, the corporate giant opted to pivot away from continuing the legal tug-of-war, deciding instead to focus its resources on building the Internet of Value. Talk about a narrative twist. One of the biggest questions swirling around the cryptosphere is, why now? After all, Ripple spent years vigorously defending its position, meticulously compiling legal briefs and amassing a legion of supporters who often applauded the company for refusing to back down. But, as Stuart Alderodi later clarified, the court had essentially presented Ripple with two choices: pursue the appeal or drop it and move forward decisively. So, why did the team pick the second option? If we take the statements at face value, it appears Ripple weighed the benefits of a prolonged legal battle, which can sometimes be more trouble than it is worth. Prolonging litigation would mean more resources drained, more uncertainty for partners, and more eyes on every step the company took. Meanwhile, dismissing the appeal offers a chance to double down on real business operations, an area where Ripple can make direct contributions to the global economy. And let's be honest, even the staunchest legal eagle might find it exhausting to keep fighting the same old battles year after year. It seems Ripple is determined to quit playing defense and start playing offense, expanding its international payment solutions and forging new partnerships. But the story doesn't end there. In fact, it might just be beginning. One particularly fascinating point is that Ripple seems confident the SEC will withdraw its appeal as well. Previously, the SEC had signaled that it might continue to challenge certain aspects of the case, but Garlinghouse's statement shows that he believes the regulatory watchdog is prepared to put this chapter behind it. Could this finally bring closure to one of the most closely watched legal dramas in the history of cryptocurrency? If you are as enthralled by these developments as we are, now is the perfect time to nudge that like button, letting us know you're eager to keep discovering the latest twists in the Ripple saga. It's a small action on your part, but it helps us stay connected with you, so we can bring you more deep dives into the world of digital assets. Folks, it doesn't matter if you're a day one trooper who has been ride or die with XRP since before the lawsuit, or if you're a curious newcomer who only recently found out about Ripple's vision for redefining international payments. What matters is that everything happening now sets a tone for the relationship between emerging blockchain innovations and centuries-old legal frameworks that are often slow to adapt. The real question is, are we witnessing a turning point that might spur regulatory change in the United States and beyond? From the vantage point of many crypto enthusiasts, the SEC's initial lawsuit looked like a harsh micromanagement of an industry that thrives on innovation. Yet, regulation can serve a purpose if it is applied fairly. After all, markets crave clarity. Without a fair rulebook, legitimate enterprises struggle to grow, and unscrupulous players exploit the gray areas. Ripple's fight with the SEC forced a public conversation about what exactly qualifies as a security. The concept might sound dull to outsiders, but it is of monumental importance within the blockchain world. If everything in crypto were deemed a security, it could stifle innovation in an industry that has already created thousands of jobs and enticed billions of dollars in investment. Meanwhile, if there is no oversight at all, the door might be left open for dangerous or unscrupulous projects. Hence, the significance of this case goes well beyond XRP. Garlinghouse's decision to drop the cross appeal also underscores a broader narrative within Ripple, the desire to forge ahead. Many people forget that corporate lawsuits, especially those as high profile as this one, can overshadow even the most well-intended business operations. Ripple wants to shift attention back to its core technology and mission, connecting financial institutions and enabling faster, cheaper cross-border transactions in ways that legacy systems struggle to match. By choosing to end the formal legal squabbling, the company is telling partners, consumers, and the entire crypto industry that it is time to turn the page and let the technology speak for itself. In a way, this pivot also reaffirms Ripple's unwavering stance that XRP itself should be spared from further classification nightmares. Stuart Alderodi was quite clear that XRP's status in secondary sales isn't up for dispute. This means that the use of XRP on exchanges, peer-to-peer transfers, and other everyday transactions remains outside the domain of securities laws, at least based on current court findings. That alone is a monumental win for both Ripple and the crypto world at large. If you think about it, there has been a lot of anxiety among traders and developers who rely on XRP for emerging financial products and solutions. Anxiety over whether the asset might be labeled a security in future rulings can discourage new initiatives. The clarity we have now sets a path for innovators to move forward with more confidence. The story also includes fascinating personalities. Brad Garlinghouse, often described as a forward thinker with a knack for pushing the envelope, has never been one to mince words, especially about what he perceives as regulatory overreach. In this instance, his action speaks as loudly as any previous statement. Then there is Stuart Alderodi, the legal powerhouse who has given clarity to the confusion swirling around the case. And of course, there is the SEC itself, one of the most polarizing regulators in the crypto community. Many project watchers wonder if the Commission's approach to enforcement might evolve from aggressive lawsuits toward proactive rulemaking that fosters innovation while protecting consumers. It seems we might already be seeing signs of that. Let's not forget about the thousands of global investors who hold XRP and have been waiting eagerly to see how this drama unfolds. For many of them, the question wasn't just whether they would see financial gains or losses. It was also about the principle of whether a technology built on decentralized protocols should be stifled before it has a chance to flourish. The preoccupation with court rulings has overshadowed the potential benefits that could arise if digital assets like XRP become part of mainstream finance. Imagine frictionless remittances for millions of people who send money to loved ones in different countries, or greater efficiency for large corporations that regularly engage in cross-border commerce. Ripple's technology promises to simplify these financial processes, so it is unsurprising that so many people have been passionately following the court proceedings. At this point, you may be wondering, where do we go from here? The next steps are not entirely set in stone, but we have some clues. Ripple has resumed focusing on its main objectives, building out the Internet of Value, forging strategic partnerships with financial institutions, and broadening the use cases for XRP wherever frictionless, near-instant transactions are in demand. The company can now invest more time and energy into product development instead of draining it on exhaustive court appearances. Moreover, the possibility that the Commission will also abandon its appeal offers a chance for both sides to put the legal complexities behind them. That sense of closure could open the floodgates for new collaborations and expansions that have been on the back burner. But do not close this tab just yet, because there is more to uncover. We have got some intriguing angles to explore, such as whether the conclusion of this legal standoff might catalyze a ripple effect, pun intended, that fosters healthier relationships between the United States government and the crypto industry. With the cross-appeal off the table, the entire status quo may shift, prompting lawmakers and regulators to consider a more collaborative approach. Could this case become the precedent that encourages clearer, more flexible guidelines for other digital assets? One might argue that is exactly what is happening now. And here is our second friendly reminder. If you're enjoying this deep dive and you want to stay updated on future developments, consider hitting that subscribe button. We only bring you the most captivating insights into how this rapidly evolving world of crypto might shape your future. Another ripple, pun intended again, worth addressing is how markets might react in the weeks and months to come. Whenever legal hurdles diminish and there is renewed optimism, it often spurs a noticeable uptick in sentiment. This sense of optimism is not exclusive to XRP holders. It can spill over into the broader crypto ecosystem as well. Investors, whether retail or institutional, like certainty. The knowledge that the SEC might de-escalate its conflict with Ripple could prompt more robust trading activity and encourage new entrants to explore blockchain-based investments. However, one must not assume that everything is suddenly perfect. The crypto market is notoriously volatile, and history has shown that optimism can be fleeting if not backed by tangible, ongoing progress. Ripple must still demonstrate that its technology can revolutionize cross-border payments at scale, forging partnerships with major banks, financial service providers, and potentially even governments. The entire idea of an Internet of Value hinges on real-world adoption. The road ahead is lengthy and filled with competition from other cryptocurrencies attempting to carve out their share of the international payment market. But by shedding the cross-appeal, Ripple is effectively removing one obstacle that was clogging its path. We should also consider the perspective of the SEC. While we have every indication that the agency is setting the stage to withdraw its own appeal, it does not mean the Commission will fade quietly into the background of crypto regulation. Enforcement actions can come for a variety of reasons, and the SEC might still keep a watchful eye on new token offerings, decentralized finance platforms, and other emerging corners of the blockchain realm. Yet the conciliatory stance in the Ripple case could be evidence that the Commission is open to shifting tactics. In a rapidly changing realm like cryptocurrency, regulators often need to adapt as the market evolves. All of this leads to an even broader question. Are we reaching a golden era of cooperation between regulators and blockchain enterprises? Though it might be too early to call it a golden era, we could be at the beginning of a more constructive conversation. The once combative environment is evolving, partially thanks to cases like Ripple's, which highlight the complexities of applying decades-old securities laws to cutting-edge digital assets. If both sides accept that progress requires joint solutions, the entire crypto community might see fewer lawsuits and more dialogue in the future. That's the dream, at least. Ripple's bold departure from the cross-appeal stands as a clear statement. We have confidence in our mission and no longer feel compelled to continue a drawn-out legal argument. Whether that stance results in accelerated growth remains to be seen, but it undeniably marks the beginning of a fresh chapter in the crypto realm. And that new chapter could be big enough to reshape the narrative around blockchain regulation. If the SEC follows suit as anticipated, we will have confirmation that both parties have decided it is time to move on, letting the technology flourish under clearer, more stable conditions. This is the moment for all watchers in the crypto space to pause and take stock. The markets are again brimming with anticipation, the regulatory environment might loosen up, and the user base for digital assets is steadily climbing. Who would have thought that a single lawsuit launched in December 2020 could cast such a long shadow over a technology that many believe heralds the future of finance? And yet that is exactly what has happened. Now that the shadow is about to recede, innovators can refocus on building solutions that transform the global financial landscape. Through it all, Brad Garlinghouse and his team have emphasized a single rallying cry: building the Internet of Value. The concept is not just a catchy buzzword. It embodies the idea that moving value across networks should be as seamless and routine as sending an email. The potential solutions are vast, from speeding up remittances for migrant workers to empowering small businesses with immediate cross-border payments that bypass currency fluctuations. With the lawsuit's heavy cloud lifted, it might be the perfect moment for Ripple to show the world exactly what it can do. Never forget that the heartbeat of this story is not only about profit margins or corporate survival. It is about the human desire for fair, transparent, and efficient systems. As we stand at this junction between the old and the new, it is worth remembering that technology is only as powerful as the problems it solves. If Ripple, or any other blockchain innovator, genuinely revolutionizes global finance, the world will inevitably notice. So, keep your eyes peeled, because the next announcements from Ripple may come fast and furious. Will they seal a collaboration with a giant bank to implement XRP for near real-time cross-border settlements? Will new pilot programs demonstrate, on a global stage, the cost and time benefits of adopting digital assets? Those are only a fraction of the possibilities. With the cross-appeal withdrawn and, hopefully, the SEC following suit, the path looks increasingly clear for Ripple to move beyond legal entanglements. If there is one thing the last few years have shown us, it is that the future can be shaped by a small but determined group of pioneers who are willing to take on bigger structures and authorities. Ripple's fight was more than just a single company's quest for legitimacy. It was a symbol of the entire crypto industry's potential to blaze a trail forward. By stepping away from this battle, Ripple is betting that its achievements in technology, policy, and business growth will speak louder than continued courtroom arguments. It's an ambitious play, to be sure, but ambition is the cornerstone of innovation. Whatever the next few months bring, it is sure to be interesting. The crypto landscape evolves rapidly, and Ripple is now uniquely situated to shape conversations about mainstream adoption. While the quest to build a truly global Internet of Value will not happen overnight, the momentum is there, and the obstacles hindering it are gradually being removed. If you are someone who has been teetering on the edge of this fascinating world, now might be the time to lean in further and keep watching as Ripple and other crypto innovators unveil what might be a new era in finance. In closing, remember that this is about more than just price charts and lawsuits. It's about a grand vision for reshaping how we move money, how we collaborate across borders, and how we create an accessible financial system that serves everyone. Ripple's decision to drop its cross-appeal is a critical piece in that mosaic, one that may well accelerate the adoption of blockchain technologies by major financial players around the planet. Stay tuned for those new developments, and thanks for joining us on this thorough journey into the heart of one of the most influential legal sagas in crypto's history. We appreciate your time and curiosity, and we hope this deep dive sparked fresh insights into why Ripple's strategic maneuvers are so significant. The story is not over. In truth, the best is yet to come.